Good morning, everyone, and welcome to Nadex Morning Analysis. It is Monday, April 12th. My name is Todd Rich. I'm with Nadex. With me from Keep Trading Simple is Brian Caprice. Before Brian and I talk about potential hotspots in the market where you might want to be focusing your eyes today, I do need to share this disclaimer that trading involves risk. It may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, with that, the story that you're going to be hearing about today, it's going to be all over the news. Everyone's already talking about it, but the word of the day is inflation. That is because Fed Chairman Jay Powell went on 60 Minutes last night, and he had a lot to say. I'll let Brian jump into that. But with our eyes on inflation and what he had to say about it, two hot spots that we're going to look at. We're going to look at one, we're going to look at gold. We always talk about gold when we talk about inflation. So let's take a look at what's going on there. Interestingly enough, we're just going sideways, but something to keep your eye on. And we're going to watch the equity indices. With the way that he's talking about inflation, we would have expected to see the markets in the green this morning. Instead, across the board, they're all slightly in the red. So things aren't exactly, the markets aren't necessarily reacting right now the way that we would have anticipated, but we got to take a look at them. So we'll jump into that, and then it's actually a good time to talk about inflation because CPI in the U.S., the core inflation number is being released tomorrow morning, 8:30 a.m. Eastern, 7:30 a.m. Central, and they're actually looking for a pretty significant pop in the inflation rate. So this is going to be the story of the week. So Brian, let's go ahead and let's start talking about what Powell had to say.
Yeah, I'll do my best. So if my voice completely goes out, guys, it was a crazy youth lacrosse weekend. So I'll do my best. But yes, if you guys can't hear me, Todd can repeat everything I have to say. But yeah, it was kind of an interesting kind of setup for the weekend. As you guys know, I've mentioned it before. I do a lot of my setups and things like that over the weekend. I do a weekly newsletter where Sunday nights I kind of break things down and have, a Sunday night gap strategy. This week was one of those exceptions because Fed Chief Powell was speaking on 60 Minutes at 7 o'clock. So it was a little bit after. It kind of messes up the strategy. I try not to, like I said, Powell is one of those guys that there's things that he can say that can make the market move in crazy directions very, very fast. He's a very big catalyst. He's the gentleman that pulls the trigger on raising interest rates, controlling inflation. Really, Powell and I would say like the White House are the two biggest kind of movers besides somebody like Warren Buffett. But Warren is a little bit more tame these days. And, Warren is more on the outside. These guys are the inside that are actually policymakers. Some of the things that Powell said last night are really kind of throwing the market. It's raising a lot of question marks. Okay. And as Todd mentioned, markets should technically be green this morning. And the reason why is Powell, again, is talking about inflation and letting us maintain this low interest rate environment, which is technically pro-business, pro-indices. Everything's going up. And remember, they raise interest rates to control inflation. This is the title we got, that the U.S. economy is at an inflection point. You're like, all right, what exactly does that mean? I mean, it's a great headline. It makes people want to watch, and that's what their jobs are. Right now, if we look at actual charts of where we are, just getting a gauge of what does the world feel about what Powell is saying, you can see that the dollar is showing a bit of weakness from it, right? If you're not raising interest rates, again, that is considered weak for your currency. And again, euro dollar is up, pound dollar is up, dollar yen is down, dollar Swiss is down, dollar CAD is down, Aussie dollar, again, all the positions that show us dollar weakness, we have dollar weakness. And again, that makes complete sense. Do remember what we've heard, though. And then, lately we've had Kaplan talking about we need aggressive assistance. Powell said we are going to see, what was it, a week or 2 weeks ago? We are going to see short-term inflation pops, but it's going to be transient. And we expect by the end of the year, it will all come back down again. Roll forward 1 week. Again, we need this aggressive assistance. We're going to let it go, but it's not going to be real. He made comments about I want to see actual inflation, not forecasted inflation. And then this is what we get last night. These are some of the, the things that we talk about. Some asset prices are elevated by some historical metrics. Okay, great. The economic recovery has been better and consistently better than I'd have expected. Help from, again, obviously because of Congress and the Fed. But yet, last week, one of his board members was saying we need aggressive assistance, that we're not out of this yet. We need to keep going, but yet we're recovering better than anybody expected. So it's like, okay, well, that's kind of an interesting say. They believe the financial sector is capable of withstanding a major market shock. Okay, that's, again, that doesn't have too much with recovery. A rate increase this year will be highly unlikely. No kidding. We've already talked about they're not even remotely thinking about raising interest rates until 2023. So again, very big surprise there. And then they drop this bomb on us, and it talks about, Powell does not want inflation moderately, or does want inflation moderately above 2% for some time. Right? Again, that should be absolutely amazing. They're not going to cap us out. The indices should be going up flying. Now, he does not want inflation to go materially above 2%. And for some people that are not familiar with this, you may say, wait, he wants us to go moderately above, but he doesn't want us to materially go above 2%. Like, what? And I think that's where a lot of the confusion. Now, one interesting thing about this, too, that I want to bring up is he talks about this materially above 2% and a return to bad old inflation days, right? But yet he's talking here about, oh, these things are high, based off off historical metrics. So the question is the new low rate environment what's going to be the now, or are we going to be using metrics from 60 years ago, which he just basically said is bad? So it's kind of interesting. And again, rolling that off and going across, I mean, here's what gold is doing, right? Here's where we were last week. We told you guys look for buys off of here, and it came back up again right about here. Right where my cursor is here. I'll move this from where we were last week to here. Right about here is where Powell started speaking. And what did he say? I want to see more inflation than what we have right now. I want it to be sustained for a long period of time. It's very unlikely we're going to raise interest rates. All these things are bad for gold. And gold did what? Kind of chopped back and forth. It went a little bit higher and is now kind of rallying back again. But really, gold had no real change, right? And if we bring in daily effects, you guys should be able to see it right here. You can look to see that 81% of clients are net long gold. He just said that we're not going to raise interest rates this year. We're going to let it run super, super hot, yet 81% of people are still net long. So, again, it's one of those things that it doesn't look like it's the best situation to be in gold right now. And again, it provides a very kind of confusing opportunity. All right. So gold right now, I think we still need to watch out for two levels. Last week, we talked about this coming down and maybe rolling back down based off of what we were planning. It hasn't done it. It's in the exact same spot. We had the quick drop. It rallied back up again and started the push back down. Obviously, Powell is going to change the trajectory of gold. But right now, I think 1755, 1729, 1730 in that level. Again, there's a lot of buyers sitting up in this area. I think are going to be areas that we need to watch out for today. The question that I don't know, and I wish I could tell you guys, I don't have a crystal ball.
Yeah, no one does.
Is how is the retail trader going to react to what Powell said last night? Remember, they have not had the opportunity to react to it. You're starting to see some jumping and some big candles popping in now as the trader is coming online. But thus far, everything we have read has not looked good for gold. Okay, so Todd, I don't know if you want to talk about any of those levels real quick, and then I'll jump over.
I'm gonna swing this over real quickly. Let me turn this on, and we can take a look at the Nadex platform. By the way, just for a little bit of perspective, I'm not as old as Powell, but You're
much better looking though, Todd. Much better looking.
So I got that going for me. I appreciate that. I was around when we had some some significant inflation. We have not, and a lot of the retail traders that are in the markets, in fact, probably most of the people that are listening to this and dialed into us, were not around when we had real inflation. And so I think he wants to avoid mistakes of the past. But when we talk about inflation, I mean, interest rates were up at 20%. My first mortgage, as interest rates came back down back in the day, was in the teens. These are just numbers that people now just don't even realize it can be there, and it can be there. So I think Powell is treading lightly where right now too, it's like we talk about inflation and everyone's going to be freaking out about a 2.5% inflation number because the Fed's goal, keep things around 2.5%. What Powell was very clear about saying is it's an average. of around 2%. So he wants to see it above 2%, materially above 2% for an extended period of time, not just one reading, and not just one reading that's driven by, say, oil. So,
and he said,
so
and remember, he said last week, we're going to see transient inflation. You're going to see inflation pop, but by the end of the year, we expect that to come right back down again.
Down.
I don't know what his timeline is or what he's thinking for what does sustain mean? Does he mean for the next 2 years? Does he mean if it doesn't come back down by the end of the year, should we expect it to come? So there's a lot of questions, and again, the charts are showing
that he definitely tap dance around, but he was very clear. Highly unlikely they're going to touch interest rates at all this year. Now, granted, we're only in April, so that's an extended period of time. You've got other Fed folks speaking not even in 2022. You already mentioned that. Yeah, that we're looking out. So some inflation, they're going to let it come, and they're going to let the economy run hot for a bit. And you think that would bode well for equities. And you think it would also bode well for gold in the long run if prices start driving up. So it'll be interesting to see how it plays out. History generally doesn't repeat itself, but it usually rhymes. The old Mark Twain saying. So we're trying to point out hot spots. Gold, potentially a hotspot. Again, it's not doing much of anything, as we can see. I've got the binary options up here. I got Brian's levels marked off in here. We've been a bit range bound. Certainly nothing earth shattering in terms of a move since what was this? It was Thursday. We had a little bit of things moving around, but Powell certainly did not move the markets yet. And we're waiting to see what's going to happen in the next when the retail traders start coming in. But a hot spot to look at would be gold. We do have some levels that are interesting where buyers have stepped in down below at 1730 in the past. If it popped up to that 1755 level, sellers have stepped in. But again, it's these numbers work until they don't work. And we're just waiting to see how everyone ultimately digests everything and what people do. So it's just a place for you to focus your eyeballs where there could be potential movement. I also did drop in a link. We've got the how to trade gold and oil markets coming up in a few weeks. Just a reminder for anyone who wasn't aware or would like to start registering, we've got that up there. All right, Brian, the other thing, the equity markets aren't exactly doing what we thought they would do. So I thought, let's take a quick peek over at the Dow. Again, you thought this would fire things up.
Yeah, and one thing too, let me add just real fast in there. Like I said, voice is not going to last much longer, but gold is down approximately, about 0.25% right now. Silver's down 0.6. So we've talked before in the past how silver tends to tag along. But it's kind of one of those things that it has almost a higher beta where when you see gold move in a direction, silver tends to follow, but at a faster rate. We're seeing a faster drop in silver. So it's kind of, remember, silver was a target of the Reddit trader, and that's kind of disappearing rather quickly. And now we're seeing silver kind of fall lower, back down to 25. And remember, I guess the targets on that were supposed to be $100. And that's what they were calling for last April. And now this April, we're basically at the same spot that we were. So kind of interesting. What you guys are seeing right now is the YM. This is the Dow. And we talked about Feel Good Friday and what it could potentially look like last week. And we're like, listen, as soon as we start breaking through, look for a stabilization and a punch higher. And again, whether you got in here or whether you got in here at the top piece of this one, I mean, this, we went from the 33,500 level from when we were talking all the way up to the 33,700 level, right? Or almost up to the 33,700 level. Missed it by about 6 points. So this is a common trend that we've seen again and again and again and again. I think this is like the 7th or 8th week now or something like that. We've had this Feel Good Friday. And then what we've seen is a little bit of a retracement on Sunday. So here's where the yellow circle here is where Powell spoke last night. Now you can see, as soon as he started speaking, we literally kind of had a spike down, a grab, and then a push back down to kind of this last level of buyers. And again, talking about the economy is doing significantly better than what he expected it could do, that should be great, right? We're going to leave interest rates low for a long time. They got to be sustained. We're going to let it run hot before we do anything. We're not raising interest. All these are good things. And yet we've seen the market come down again. Now, it has kind of rallied back up again from kind of where its lows were in the overnight. And again, this is important to note where, where this kind of really stabilized and started moving for the day would have been right around in this level, right? That's right around where the European Open is. It kind of fell right into that level. Right here, you can say that, listen, there's a stabilization. Here's the European Open, pushed it back down at base. And then again, the same Harry Potter, and I'll just drag this one over. There's your push up from a level of basing. There was a pullback into the level. And then bam, it kind of took off in the overnight. And now the question is, are we prepared for this to turn and flip, kind of reverse? Or was this pushed down a way for the market to position themselves to get it at a lower price for it to rally much higher? Because based off of true technical, based off of fundamental analysis, everything that Powell said should rise this market today. All we saw, the response was the price going down. And the question was this the banks, the institutions, the big money, the smart traders? Were they driving the price down to get it at a discounted price before another push higher? And then again, as you mentioned, tomorrow morning, we had this CPI number right here. And again, it was 0.4 previously. It's supposed to be 0.2. The core is a little bit higher. But here's that first spike of inflation. I'll tell you right now, if these are negative, if either one of these red numbers, they said, hey, listen, we're going to see inflation, right? It's going to spike and then come back again. And they're saying that the economy is doing great. If we don't have the inflation here, or even if they come in just as expected, that's kind of one of those things. Like, yeah, I mean, it could definitely be a big catalyst. Now, just a word of warning, this is at 8:30 a.m. tomorrow morning. It's before we're going to get to speak. So the way that you guys can play this, definitely go over there, and I would be looking at gold around 8 o'clock tomorrow morning. I would look to see where the indices are at 8 o'clock tomorrow morning. See if you can find something to take advantage of this. And remember, with the way that contracts are designed at Nadex, the most you can lose is the cost at the end of the transaction, including fees. There could be, and again, it's an 8:30 reading. There are 8 to 10 a.m. binaries that you guys can take advantage of that will have smaller strike differentials tomorrow morning, which means they don't require as much movement. Again, playing that 8:30 to 9:30 pre-market trade in the morning could be a really ideal setup if you guys, and again, if you're not familiar with, small those, trading those shorter durations, go over to demo mode. Get in there, start looking at the 2 hours, look at some of the smaller things in currencies, look at, some of the call spreads. There's some great opportunities at 8:30 releases, particularly with something as big as inflation.
Yeah, and so I'm actually going to show you when you're over in the binary options. If you're looking, there's the 8 to 10 a.m. gold. You can see this is going to expire in an hour, but we're going to have tighter widths on the binary options. So it gives opportunity for even just smaller moves, but there's opportunity when it spikes or things move around for you to try to grab one of these, one way or the other. The other thing that that I was thinking about, and you were talking about the markets and how the market reacted, and I wanted to and now I lost my thought, but it was all around how people. Oh, I know what it was. There was something that they tempered. If I'm going to jump back over to the Dow indice. Here, I'll go ahead and bring up the daily binary options just so we could take a look. But something that they mentioned that I thought was rather interesting that can make can temper things a little bit is that people right now are very highly leveraged. There are a lot of hedge funds, retail traders that are leveraged up, borrowing money, trading on margin, and they're, are they prepared and do they have the proper risk controls in place? And specifically speaking, last time the market was this highly leveraged, we had the 2008 bubble. And we're seeing spots of that play out now. Namely, we had Archegos. I think that's how it's pronounced. That it was.
I don't think anybody knows, so it's okay.
But billions. I mean, tens of billions of dollars evaporated when, and it really hurt the banks. A couple of places got caught because they were the ones loaning them the money in order to run this private hedge fund. And it was ugly. The question is, are there more of these out there in this market where people are over leveraged, and we are seeing some of this bubblish asset feel to the markets? But the question is, what is a bubble asset? And Powell, he tap danced around that answer last night as well. This is one of the cool things about Nadex products, and this is one of the things why a lot of traders like Nadex products is you get effective leverage trading these binary options, the call spreads, our knockouts. You do get effective leverage, but the fact that everything has got a defined risk-reward relationship, the concept of trading on margin or margin, initial margin, maintenance margin, margin calls, forget that. We don't have that in Nadex. You'll never lose more than what you initially put into a contract because we have got small notional size dollar contracts, and what you pay to get into a contract, you can never lose more than that. So the concept of blowing up because of a margin call at Nadex doesn't exist, which is why people like art markets, where you can get some of the benefits of effective leverage, but be protected from something egregious happening that's not necessarily in the broader markets. So some of these equities, like the Dow that you're looking at, people could be a little leery on waiting to see, are there other bombs out there? So I think everyone's still treading a little
bombs.
lightly.
Yeah. Before we take off, I know we're a little bit late today, guys. One last thing. Speaking of bombs, if you want to switch back over,
Yep.
COVID is still here, right? This is what Merkel was saying this morning, the German chancellor, talking about virus infection numbers are still too high. And it says the third wave of the virus is likely going to be the hardest and the toughest for Germany. That kind of cripples a lot of the European numbers. The Swiss is having a vote today. I think it's today, or there's a Swiss vote talking about mandates and targets and things like that. The public is afraid that with all the issues AstraZeneca has had. So again, it's in the news in Germany, Switzerland, Australia. This came out just a little while ago that they've ditched their COVID vaccine targets, saying that they're conceding that not everyone is going to have their first jab by the end of the year. That was originally the goal. We're talking about it right now. So, looking on a global spectrum of where we are right now, other countries are still struggling very, very, they're having a very difficult time with COVID. We have some numbers here that don't look great, but we haven't really had that rolling third wave. We will probably see cases go up this week, and that may actually pop into the news and be a negative for the overall indices. Reason why is because spring break. A lot of people are traveling. Not everybody's vaccinated yet. And again, even if you are vaccinated, you can still get it. Just the symptoms are a lot less likely. So again, this could be a week that we see some pullbacks in the Dow that could lead to some great buying opportunities. Fundamental wise, everything looks great. Nobody knows what's going to happen with COVID. Everybody overseas is having issues, and we just had spring break, and everybody's coming back from it. So, there may be our pullbacks this week to be able to go long for better prices.
Yeah, definitely important because the two places that seem to be handling COVID okay, U.S. and the U.K., the rest of the globe is definitely having some challenges. So when you bring all that together, it's creating some type of confusion, and people aren't quite sure. So hot spots in the market. Watch gold, watch the equities. Tomorrow morning, we've got CPI, inflation numbers.
It's going to be a big one.
It's going to be a busy week. We went through a lot, but there's a lot coming out right now. And so I want to help you be able to digest everything that's going on out there, where you might want to try to focus your eyeballs. Obviously, we don't have a crystal ball, but want to help you access the markets and at least be informed about what a lot of this stuff means. With that, if you've got any questions for Nadex, please email us, customerservice@nadex.com. Brian is also very accessible, support@keeptradingsimple.com. Brian and I will be back tomorrow morning. And then Brian's also got, and we kind of tag teaming a little bit, tomorrow afternoon, or tomorrow midday, I'm sorry, the full-blown weekly analysis session where Brian goes through all the markets. So be sure to check that out as well. You can register for that on the Nadex website. With that, we definitely went long today, but I think it warranted it with everything that's out there. Want to wish everyone good luck in the markets. We'll catch you again tomorrow. Thanks.